Can equity markets rally if central banks keep rates higher for longer? Can they look through that, Helen?
Yeah, I absolutely think that they can. So interest rates are important, but at this level, equities can still perform well. But there are things we continue to need to focus on. The first is those two tail risks. And the tail risks, last time I was here, they felt pretty small. They definitely feel a bit bigger. The tail risk of inflation being sticky and the potential of rate hikes. And secondly, that recessionary concern, although that one is probably the one that has shrunk a little bit. The key thing, and I know you've talked about it already this morning, is these earnings numbers. The earnings numbers do need to come through. And what we're seeing, interestingly, we saw it a bit last week in some of the European chip names, is when there is anything that is conceived as anything like not perfect, even if the earnings look strong, the revenue isn't perfect, the guidance is a little bit more cautious, you are seeing quite a big pullback. And this week, as you've already said, some big names reporting. So for me, it's those earnings numbers that have become almost more important than anything from a macro perspective, which is an interesting market.
How asymmetric is the position we now find ourselves in, though? How hard is it going to be to make upside gains from here, given the fact that the tails are getting bigger? And therefore, is the bigger risk, is the asymmetry lies at the downside, and that's where maybe you want to be hedging maybe some of that downside risk as well. And if you are going to be hedging it, how do you do it? Yeah, no, I do think there is a bit more of an asymmetric risk. Again, if you take the first quarter, I think 7% for the stocks, it was never about multiplying that by 4. It's more like where we are now. So a much more steady market is what I think most of us would predict for the end of the year versus what we saw in that incredible first quarter. How do you hedge it? A little bit of the defensives and the quality defensives. Again, if you look at the names that are doing well already today, These are quality defensive names. And that's a kind of good hedge to play. The other one that's really exciting for me as a CEO responsible for Europe is the European names. This really could be an interesting time for these names. The broadening of the market, much more relevant in Europe. The valuation gap, which is now at 40% versus a more traditional 20-25, could be interesting. And if the ECB does cut before the Fed, which is now basically what's being built into consensus, could also give us a bit of a pivot for the small caps. The argument recently about buying Europe has been the US is so expensive, you want to look elsewhere. If the US becomes less expensive, why do I look elsewhere?
I'm not sure that is the only argument for Europe. The other big argument for Europe is the breadth of the market. It is much more broad in terms of where you find those quality winners. And I think that that is going to be a much more interesting play. And, of course, the interest rates. Now, whilst I say that interest rates long-term can stay where they are, there is no doubt that if and when interest rates do cut, that is going to give a boost to that market. So that's another thing. The US dollar, we've talked about the strength in the US dollar, generally not good for equity markets as a whole. But for multinationals in Europe, a strong US dollar isn't a bad thing. So there's a lot to play and a lot to be interested in Europe. I don't think it's just about the valuations, albeit, Guy, the valuations, of course, are one of the factors.
So if we're talking about that broadening out in Europe, do European investors in Europe, need to be concerned about the mini correction you're seeing in the States in terms of it being tech-led? Is there a bigger, more magnified read-through into Europe, or is that minimized when it comes to the kind of the cross-Atlantic trade?
I think there is going to be a read-through. I mean, I think this goes back to this week, some really important earnings numbers coming out, particularly in some of those bigger, really important parts of the Mag 7. If they miss, there is going to be a read-across globally. There is no doubt about that. So there is going to be read-across, but the read-across is much smaller in terms of the implications for the European market. You're not going to feel it in some of the industrials names that have done very well, some of the A&D names, aerospace names that have done very well. So the read-across is much more muted, but I'm not going to say that there won't be one. Of course there will. And I think we're all very focused and hoping that those numbers do well. So that's going to be a key focus this year.